Fear and greed often rule the markets, and 2025 so far has been a great case study of this. Learning to recognize these emotions within yourself and not let them control you will make you into a better investor who's able to make more money in the long run. Now, I've personally been building software and teaching people about the crypto and Web3 space for many years now, and today I'll be discussing how fear and greed play a significant part in any market, both in crypto and traditional markets. And in the next few minutes, you'll learn a bit about this key concept. We'll look at what's happened so far in 2025 to highlight this, and we'll end on how to avoid being controlled by these emotions. Now, when people begin learning about how markets work, they think that there's an exact science to it, especially since economists in the news always seem so certain about what they're saying. However, economics is a study of human behavior and is therefore a social science, not an exact science like physics or chemistry. Economists try to fit predictable numbers around unpredictable human emotions, so their mathematical models are just naturally flawed and are at best approximations, while at worst just totally off and unreliable. Markets are a natural phenomenon that arise as an expression of human behavior, with two of the most important emotions that drive markets being fear and greed. And this year we've had front row seats of these emotions and actions, both in the crypto markets and traditional markets that have seen huge volatility in prices. The S&P 500, which tracks the 500 most important companies in the US stock market, suffered a huge drop at the start of the year. But just this past month, it was up over 19%, experiencing one of the greatest comebacks in stock market history. As you can see here in this graph, is ranked 15th in the largest rallies. And this goes back, 1974, this goes even further back. We're talking 1950s, right? Talking over 70 years. Now, the crypto market followed a similar pattern. At the start of April, Bitcoin's price had dropped as far down as 76,000, but since then it shot back up, and just last week it broke a new all-time high of over 111,000. You can see here, it just picked right back up, right? Some big volatility. Now, if you want to learn how to grow real lasting wealth through crypto, join a community of like-minded individuals and access over $1,900 worth of courses entirely for free, then click the link in the description below. So why did we get all this price volatility? Well, the US is the largest and most important economy in the world, so a change in its leadership is always going to be a big deal, especially for its own stock market. Nonetheless, Trump seems to have tried particularly hard to be the single most important factor in the market dynamics for the past half year or so. When Trump won the US election late last year in November, markets got excited. Trump is a businessman, and so there was an anticipation that his presidency would be more pro-business, and therefore market participants greedily bought up stocks and crypto in anticipation of this growth, which drove prices up. Bitcoin even hit a significant mark of $100,000 in December, leaving everyone in anticipation of what could come next. However, as soon as Trump got into power in February, he began to make use of something that he'd been mentioning a lot in his campaign trail, which were tariffs. And as soon as Trump started wielding tariffs as this geopolitical weapon, the markets quickly became fearful, because tariffs ultimately increase the cost of doing business, and so businesses generally suffer from them, which went counter to the prior sentiment the market had of Trump being pro-business and being good for business. On Trump's now infamous Liberation Day on April the 2nd, this picture here was from the day, he declared tariffs on literally all the countries around the world, and even some places that aren't countries, with some countries seemingly being given really high tariffs, like China at 67%, Vietnam at 90%, Cambodia was also really high, I think at 97%. When this happened, the last time that a US president had declared such high tariffs was as far back as the 1930s, when President Hoover had the Smoot-Hawley Tariff Act during the height of the Great Depression. So it terrified the markets, right? They made this association. fear took over and the markets retreated massively. Bitcoin, which was already dropping amidst all the tariff talks leading up to the Liberation Day, fell as low as 76,000, 76K price, as I mentioned previously, while the S&P 500 dropped over 12% in just a few days. Now, for people in crypto, 12% might not sound like a lot, but it's a huge amount for something as big as S&P 500 and for traditional markets, right? And right before enacting these sweeping tariffs, Trump decided to do a 90-day pause to negotiate deals with each country. And that pause gave markets hope that these tariffs would more just talk than real action. So we went from pro-business Trump to tariff Trump to once again, wait a minute, maybe it is pro-business Trump. And since then, the markets have become optimistic and greedy as they remembered, the power, the US president is actually a pro-business deal maker, right? And so this has just led to this kind of fear, greed roller coaster with prices, right? If there's one thing markets hate, it's uncertainty. And Trump's seemingly erratic behavior led to these huge swings in the market, right? Several fear and greed indices exist that try to gauge the market sentiment by pulling together a bunch of data points like sentiment surveys, the ratio between shorts and longs by margin traders, and other economic indicators. And in the past month, headlines suggesting we were potentially heading into the next Great Depression incited so much fear in the market that at one point the gauge on this site here, feargreedmeter.com, which is a good one to go to, hit below 20 out of 100 for both stocks and crypto, indicating, as you see here, extreme fear, right? However, as soon as Trump postponed Liberation Day tariffs and then struck a deal with China to bring tariffs down to 30% on China, 10% on the US, we saw this sentiment reverse and all the fear dissipated and greed began to take over. And just last week, we were above 80 out of 100 and back on the extreme greed side of the counter. This entire situation is very reminiscent of this classic cartoon here, which shows a sentiment can easily balloon and get away from us into either depressive fear or euphoric greed very quickly, right? As I said earlier, markets are a natural phenomenon driven by human behavior, and emotions can and do often make us act irrationally, especially in markets. All of this extreme fear and greed has translated to a huge volatility with the VIX index, which measures volatility, right? And it hit some of the highest levels it's ever hit. In the last 5 years, it's literally been the highest. But even historically, it's among the highest peaks, right? Now, there is some truth that parts of today's economic data around the world show some pretty alarming numbers. For example, governments around the world are in extreme levels of debt, so much so that the US is now paying more in interest on its debt than its own national security, which is pretty insane, considering they have the largest military budget in the world. Moreover, Japan, who has the single largest debt of them all and is one of the largest economies of the world as well, with their debt over 230% against their GDP, is now claiming that the situation is as bad as Greece. And I don't know if you remember, but Greece toppled over and had very significant impact in Europe some time ago. And this is just because their interest payments have also been going up a lot since in recent times, Japan's has. However, it is still incredibly important to be aware of the size of the fish you are in the ocean, right? There is this economic data that can be alarming. But most people are small fish in the ocean, and therefore they're actually quite susceptible to manipulation. Most markets, even if they're regulated, still have manipulation. It's kind of unavoidable. And this is because, as I've already said, markets are not an exact science and humans can be controlled by their emotions. So, we're seeing this data, and most mainstream media is just completely against Trump. This is just plain and simple, right? And so part of the manipulation that people face is purely political, as these news outlets are attacking his methods and strategy to try to weaken him. And the idea that we would have potentially be heading into the next Great Depression was just pure fear-mongering, right? Like, there are alarming numbers, but, the tariffs is something that Trump switched on. He could just as easily switch them off if disaster unfolded, which he seemingly did. So even entertaining the idea that we might be heading into Great Depression just seemed a bit ridiculous. But it was all there over the media, right? And now that, it's mainly clear that he's been using tariffs to renegotiate with trading partners, we've not seen any praise from news outlets either for the huge reversal in the market, just highlighting their bias and consequently their emotional manipulation, right? Those headlines were just fear-mongering, and they worked, right? They drove a huge amount of fear into the market. But you're not only susceptible to manipulation from, news and political interests. There are many market participants who love volatility as it's how they make money. For example, market makers literally live off this and are known to sometimes sell off assets heavily to push prices down and, scare people, bring out that fear so that they jump out of positions or liquidate, liquidate margin traders. And once the price has fallen to where the market maker wanted, they then buy back up those assets at a lower price, a while later. Banks, for example, also make money off trading. And in the first quarter of this year, 5 of the biggest banks saw record-breaking revenue from trading fees. For them, volatility is good business, right? So there's just countless examples of where manipulation can, come in and slip up and swallow you up, right? So it's really important to be aware that the fear and greed is there to, influence you. And so, like, if fear and greed are the ocean waves that, try to sink your ship, then conviction is the antidote which turns you into an unmovable rock that's able to weather the storm. Conviction comes from truly understanding the assets you're investing in, why they exist, what purpose they serve, how they work, and from there, forming both a hypothesis on what will make them become more valuable over time and a personal strategy on how you will invest in these assets and when you should exit them. While business and life often requires a lot of short-term thinking, most successful investors need to learn to ignore the noise and view things on a long-term horizon. And it's this perspective that will allow you to avoid falling to the vagrancies of the market that will try to push and pull at your decision making. For example, someone of strong conviction on Bitcoin would have seen this recent drop and all the fear as a moment of market rationality and seized the moment to buy the dip. Warren Buffett, the greatest investor alive still, has an important saying highlighting this concept, which is be fearful when others are greedy and be greedy when others are fearful. So when the market irrationally moves too much to one side, just be rational and think, have my hypothesis being invalidated? Does something actually changed, or is it just market craziness? And the same on the other direction, when it gets overly greedy. Is this just the market getting euphoric? Has something fundamentally changed to my hypothesis? Should I, do something, or should I just ignore the noise? By conviction, I don't mean just blind faith, right? Markets can behave irrationally for longer than you can be liquid. So you also need to understand your own personal financial situation and revisit the basis of your investment hypothesis from time to time to see if they've been validated, for some reason. Plus, in crypto, it's important to understand the 4-year cycles, which I've written about before, and not get yourself caught out with the latest exciting narrative, because all sorts of narratives will come and go in crypto, and that's where a lot of the market, the money will flow, right? Greed will take over in one bubble of a narrative, then it will dissipate, and then greed will go somewhere else, right? A solid strategy based on your own personalized situation and grounded in a solid analysis is the best way to not get carried away, right? All of this is easier said than done, of course, especially in crypto, which is a fast-moving space. Everyone who's been long enough in crypto will have stories of how if they bought Bitcoin or some other crypto, when they started and just held, they would have a lot more money. So remember that just like the tides of the ocean, if you can learn to weather the storm of market volatility caused by fear and greed and stay steadfast with strong conviction on strong assets into the long term, then you'll become a great investor. And fear and greed will not take over and influence you. Now, to finish, if you want to learn how to grow real lasting wealth through crypto, join a community of like-minded individuals and access over $1,900 worth of courses entirely for free, then click the link in the description below and I'll see you there.